Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
I think I have a theme for today, maybe this whole 4 years: suspended disbelief. Already getting all kinds of exhaustion. So Trump has a lot of headlines that are coming out left, right, and center. It's a world of changes, potential changes, and it's very tough to know the end game. So the market's going to be incredibly dangerous and choppy for anyone who has a very, very short term focus. I think in intraday trading, for example, your health and wealth are paramount, and they're going to be in trouble under this administration with many, many, many headline risks. It was so much easier under Biden, and I'm not saying the team of Biden, Yellen, and Powell, because they were coordinated. They were all Democrats working together for the same end game. And the changes that are underway are going to be disruptive to a trend direction. Some are still very bulled up. Some are very, very worried about it, obviously, with good reason. You know my call since last June of 2024. I can still see recession risk pulled forward end of this year, regardless who was coming in. So maybe they're trying to, do this fiscal restructuring and help that particular end of it, the manner in which is very drastic. And now last night, we're not quite sure which 51st state that Trump is going after, Canada, Greenland, or now the Gaza Strip. So regardless, it's throwing, a lot of noise, and it's very tough to find the signal. But the signal right now is the market has gone very, very much sideways in a choppy, volatile way. So overnight trading is going to be incredibly complex. So we have the combination of post-election, we have added earnings, and right now the market is skittish because of all the macro. Macro, absolutely. Policies dictate price. And then we have volatility, which I already warned. I said after that year, last year, we're going to introduce a ton of volatility into 2025. That's already happening. So basically, it is election, it is earnings, and it's also escalation. So if you read my piece that I did last week, all about China, and of course, they are percolating up lots of little volleys. So for example, Google antitrust yesterday, Apple, the App Store today, on top of DeepSeek made free, unlike closed open AI. It's like the Inflation Reduction Act. So the point is, we have a lot that is incredibly noisy. I just highly recommend pulling out is very, very helpful in this particular market. And then, of course, protecting into what I think could be March OPEX type of volatility. And then we'll see if we get saved here. But I'm still on track with my expectation that we're going to have recession risk pulled forward at the end of this year. So one of the things that I look for, as you know, is this yield curve, this steepening, this bear steepener of a yield curve when and if we get it. And then just to remind you, this is the 10-year, 2-year on a weekly. This is on a daily. And right now we are flattening. So that's not the surprise. So we had September 18th, which is way back here when I warned in the morning, time for a yield spike. And then again, December 12th, right here. I saw this pattern coming and I said, a time for a yield spike. So those two calls have been really, really good, even though the Fed cut 50 basis points. Some think they were kind of removing some of that insurance, if you will, of a recession. I don't think that's not my interpretation. In any case, Trump was elected and then we had another occurrence. So this was September, that was December, and I saw this bear steepener. Then I also said, prepare for bear flattener. And we're going to come back down into this purple area, potentially this green line. And then I expect it to show us what it's really made of. What happens down here is the momentum starts to come into this zero mark and probably does the same thing as it did last time. Scoops below and then gets back up. So we have some time here. This is then, translate that into the 10-year right here and the 2-year. Now the 10-year is moving faster. And this is exactly what I expected, remember? So this is this trend line all the way down here. And then again, we've got April. Remember, we had a macro event back in April. They did some policy intervention. We had a tag after that September 18th FOMC when I did warn, right? Time for a yield spike. We did have a little tag. And then I said, I don't trust it. And then December 12th, right here. I said, nope, it's time for a yield spike. All right. So far I've been in sync with this guy. Now this is an inverse head and shoulder. This is what I've been warning about. But this is time frame congruence on the left. This is an overshoot. This is a cradle formation. This is also time frame congruence over here. We're going to come back up here and we're going to tag the underside of this purple line. So we're here now. Look at that. There's your tag. There we go. We're here. Now, by that, the 10-year has fallen into, do you remember my level that I gave? 4.44. So I was pretty focused on that. So the 10-year falling into 4.44, and we would probably reach that about the 55-day for TLT. TLT, pretty simple, pretty straightforward, right here. See this red line? That's the 55-day moving, exponential moving average. I happen to like EMA on my daily. All of these are EMA. So the point is we still have this left shoulder, head, right shoulder. We're going to be here today, 89.5. That's exactly what I expected. And the 10-year, same thing. It already, had fallen down into that level. So the thing is that this might have been a absolutely great, well-timed bond bounce on yields falling into the 4.4. And by the way, also said yen would go with it. Here's an example of FXY. Same idea, right? So they oftentimes travel together. Bonds, yen, bonds, and gold. Now, we already know what happened with gold. But what we don't know what's going to happen, honestly, is this. Dollar yen has been rolling over. On cue, this is it. We're coming down into the 200-day, which is that green. This is broken inside the 10. We're coming back down to this kind of 152 area. I can get exact, but you get the idea. So we have to break this and really do more to get below and stay below the 200-day before yen has a really solid chance of moving higher. And now the yen carry trade unwind part 2. I said we're not ready for it yet, and it's going to give a lot of head fakes. So I obviously have my opinion about this since I warned on July 13th back here that this was extremely extended. All right, so now we've come back down. We kind of shimmied down this trend line, which is a monthly trend line. We got a little bounce. That's all it is. It's only a bounce. Yen right now is not, a yen carry trade unwind is not yet a threat on folks' radar. That's all I want to say about that. It's not yet a threat on folks' radar. So we've got a yen bounce, we've got a bond bounce, and then of course, gold took off for all the reasons we've been talking about this. Warned on October 29th, not a good idea to be long gold. It looked like it was going to go parabolic, but it was exactly when it fell into the Trump election and Bitcoin stole the money flow. So now we've gone through all this sideways, and now we've been obviously pushing beautifully higher since this exact candle. And I got excited about this because it was a bullish engulfing right at that 10 and 21, and I threw a trend line over it. So you can kind of see that is a fib level, but that's the trend line. And we did a great job of getting above. So we did this. That was before, by the way, January 14th. I saw it kind of forming. That's why I also had more bullishness that bonds and yen were going to move higher with gold. So this was absolutely it. Gorgeous. It had to hold above the 10-week, 245. Had to hold above 245. It did beautifully. Then it gapped up. Wicked bullish, like wicked bullish. All right, so if you've been here play by play, you know that this is exactly when I'm warned. Ooh, this looks good. Okay, but it has to stay above the 10-week. It did, little shimmy, then it gapped above, wicked, strong. Here's some fib levels, just because when we're in blue sky, I got to throw something on it. We hit the 262.50 yesterday. Yep, not the 70, does not have to be perfect. We base around here today. Wouldn't surprise me because you can already see we're above 264. Base up here on our way to the next kind of parabolic price target, which is 269 roughly. Not a game of perfect. And continuous contract, we're already up pushing into that 2,800. We'll look at that later. So gold and then silver always follows gold. It's kind of slow as molasses. And then what happens with precious metals moving? We already had soft commodities proving that they were moving. We have precious metals moving, even miners. I mean, look at the miners even moved off that 100 week. Beautiful. Not as rambunctious, this is true, as gold, but the ones that I liked the most and highly recommended months ago, but also most recently, because they were doing this gorgeous digestion. This was it right here. I was like, beautiful, beautiful, beautiful. And the fact is, this is fine. All that's fine. Now we're getting a little extended. Now we're getting in that kind of GLD move where we've already reached the 127 fib level. The next one is 269 at the 1618 fib level. This is what I'm seeing. The same kind of digestion that we could have in the markets where we go sideways for a while, long while actually it felt like, right? Because we literally have been going sideways, choppy for this whole kind of period of time. We're not really going anywhere fast. We're really, really choppy mess, very dangerous. And gold is sniffing out all of this difficulty and also weak dollar. So the dollar wasn't really my focus, as you know, but dollar and yields right now are falling. And I want to show you this. 107 has to be taken out for this to really form to the dollar index on a day and a week, for this to really form a reversal. And it feels like it wants to. It hasn't gotten there yet, dropping below 107 and coming back down. This is the one kind of perplexity for me because it is usually risk off. Dollar goes up on greed, also goes up on fear. This one right now is coming back down, and that can be a harbinger of money moving out of the US market, right? So as we get kind of that escalation side of things and where the earnings have not been so great, CAPEX might be great, heavy, large, but the storytelling has been great with Palantir and NVIDIA and oh my, but the actual results that we've gotten from Google, for example, AMD, Micron, they have been poor, very poor. So folks are starting to kind of realize, maybe this is as good as it gets. So I'm watching this as also a tell of kind of money leaving. So we'll see. We'll see what happens. But right now, this is one area where I'm focused on the dollar as gold has already kind of run up, might digest a little bit here. Yields and oil are still softening. In particular, you know, this 4.44 level, we're almost there. And we break that, we're going to come back down into 4.35. That's another kind of really important bounce level area. But for right now, so far, so good as it relates to higher bonds, higher yen, higher gold, market chopping about violently. This is the cues. Since December, we literally, remember when the market started selling off underneath the surface on December 2nd? We've really just done this. A little dangerous there. Zooming out is a much, much better idea. Hit a SPY, pre-market on a 2-hour. Here's your election gap. This is the 3% down day. We had a 90% down day. We had another one on this Monday when I was gone. Monday also, I believe, was a 90% down day. It took a little while, but point is, it's not a safe macro backdrop. It's not a safe fundamental backdrop. It's not a safe technical backdrop. You know where I'm going with this, right? So take care out there.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.